Welcome to week 43, 2025. We've got a few key markets for you here. In our picks of the week, we're going to cover natural gas, U.S. oil, the CAD yen, and also the EUR US dollar. So nice cross-section of markets. We're going to focus on commodities and Forex today, and we're going to have coverage of all the markets across the gamut here every day this week on our live stream series over at Switch Markets on YouTube. Be sure to check that out. It's actually on the same channel that you're watching this video right now. So week 43, 2025 is poised to be a big one. The headliner this week is going to be US CPI. We're going to talk more about that in just a second, but that is on Friday, so don't miss that. Friday, 8:20 a.m. Eastern, about 10 minutes before that release, we are going to get CPI data, and that's going to be absolutely huge when we're talking about the US dollar, commodities, stocks, risk assets, crypto, really whatever you're trading. That CPI release will shake volatility. So, all right, let's get started with the big mover and shaker from the Monday session. It was natural gas. Natural gas was in play, gapping up about 15% on the session. And the biggest thing to take away from this market right now is you're going into wintertime seasonality. So that typically brings more bids to the market. Now, when I say wintertime seasonality, I'm talking about the Northern Hemisphere. So when the Northern Hemisphere goes into those winter months, late November, December, January, we typically expect more demand for natural gas to heat homes, to heat businesses, things like that. So as that demand, or as that implied demand rises, the price of gas typically rises as well. Natural gas, you catch more bids in the market, but usually it happens about a month ahead of time, 6 weeks ahead of time. So right here, this was the big move today. Fall seasonality wasn't really the only reason for the move. The other big move, or the other big market driver, was the commitment from the Eurozone, the EU nations, to taper off of Russia natural gas purchases and imports by the end of 2027. That was also another big market driver. Huge news item. Typically, those types of news items break over the weekend, so it's really difficult for us to ever know when those are going to happen and be able to trade them in real time. But a big time, really a serious situation here for the natural gas market. We have a bullish crossover on our 920 EMA strategy. If you're not familiar with that, check out the How to Trade Com YouTube channel. We've got several videos on the 920 EMA. I also do workshops and webinars that I've done on this channel as well. So go ahead and check those out, and that'll be under your live stream section. So what we have here essentially is we have a nice big yellow candle, and that's sort of our buy signal. Now, I wouldn't really say to buy from this level right here. I think that this does suggest that a long side bias is probably warranted, especially with those fundamental market drivers as well. So if you're looking to get long, I mean, that's a pretty good reason to get long, but do you want to go in right on the daily close right here? Do you want to go on Tuesday's open? You could do that. Typically, with the way that these trades work is you do see a retracement after the initial signal. So we're just going to go ahead, maybe a Fibonacci retracement right there might give you a little bit better buying location down there at about 311. Potentially maybe a pullback to the 9 EMA itself. Right now we've got the 9 EMA somewhere around 3074. So if you could wait for a pullback, that may be better. But the top side target, a legitimate target, is going to be June's high, which is right up around 4 flat. And if we keep getting these big gap up days as we roll towards the end of October, you could easily see this level tested in short order. So we got a close eye on June's high, which is right up here, right there back on June 20th. 2025. Interesting stuff. That's sort of, if you're a smart money concept trader, that would be the top of your market structure or your liquidity sweep. So that's sort of a look at natural gas, probably a bullish bias, especially with the fundamentals. Top side target, I mean, we shouldn't really run into anything until 4 even, but we will see exactly what happens with price action as we move forward this week. So there's looking at gas. As far as U.S. oil, WTI, interesting market, very interesting market. I'm going to keep the technical analysis very simple. Ignore all the indicators, ignore everything. What we need to know here is the monthly double bottom and where exactly that's located. I mean, it's right down there, right around 55.15, 55 even. And that's going to be for your U.S. oil CFD. Now, the prices on this type of commodity are going to be different. The prices of that monthly double bottom are going to be different on your WTI futures contract. They're going to be different on a different CFD. So what we need to be able to locate here, no matter what you're trading, if you're trading an oil product, a US oil WTI product, you need to be aware of that monthly double bottom, which is right up just above that 55 even level. So if you're watching that, that's probably the key zone. Now, if you're trading that over on our MT5 platform, you're going to see this at Switch Markets. You're going to see the same double bottom down there. The prices are just going to be a little bit different. So be aware that the monthly chart's the one you want. You want to be looking at yearly lows. Potentially, we put a trade idea out the other day where we could get a bounce, maybe from like 55 and a quarter, somewhere in there. Maybe a little bounce scalp for 25 to 50 pips. That's not a bad trade idea, but be ready down here. If this support zone does give way and the bidders do not really defend that level, then the price could go very, very low, very, very very quickly. Downside targets, if you break 55, you're probably looking at 52.50s, maybe even 50 even. It's a fascinating time to be a seller in WTI crude oil because we are in the fall. Remember, natural gas catches bids in the fall. WTI catches asks. So we'll see exactly how this works as we roll deeper into 2025. Now, CAD yen, interesting market. It's one of these that is very, very popular right now. A lot of folks are trading the volatility in the Canadian dollar, which is related to WTI crude. Typically, as crude oil strengthens, so does the Canadian dollar. Well, what do we have here? We've got a weak crude oil market, and sort of the Canadian dollar is twisted in the wind, going along for the ride. The only thing is the Japanese yen, the counter currency here, is going to be the one that you see a lot of uncertainty really surround, and that has to do with government leadership. That has to do with debt levels. How fast is the BOJ going to unwind its balance sheet? Very difficult to say. So right here, if I'm looking at the CAD yen from a technical perspective, I'm saying, well, really a choppy, really tough month. We've got a 13-month EMA down there at 106.83. That's going to be a pretty darn good entry to the top side. I would just go ahead and take my granularity down to maybe a weekly chart and see if I could find some levels to hang my hat on. And you see right there, you've got a 13-week EMA right around 107 as well. So nice little spike low here, little Fibonacci retracement sequence to that spike high. 62% is right around 106.93. I think 107 to maybe 106.93 is a fantastic area, potentially to be robust support. I'd be watching that to the downside if I was trading this pair. Euro USD is going to be we're going to start with the 920 crossover on the daily. As you can see, this market is really tightening up. Now, theoretically, you're still working a sell signal from back on the 7th of October. Really a nice initial trade. Stop loss would be somewhere up in here, but the market's reversed. And now what we see is these the 9 and the 20 really coming close together. That's a signal that the market's flattening out, and the downtrend that was there may not be there. Well, it's not nearly as strong as it once was. Now, if you're bearish here, that's not necessarily a bad way to be playing the action. But if you do get that crossover, that 9 EMA crosses up over that 20 EMA, and maybe you see a little bit of a breakout in our RSI where we get just away from that 50 level. It's tough trading anything when the RSI is 50. That means we're not moving. But if we do get that crossover with the 9 EMA over the 20, then we'll have a chance potentially to consider a bid. And a lot of folks, believe that once that strength in the US dollar is over, that short-term strength, maybe we'll be looking at 120 to the top side, a nice big natural resistance zone. I would have that on my radar, but I wouldn't rush things. I wouldn't be in a big hurry to dive into this market because it is flattened out for about the last 3 sessions. Maybe a crossover is brewing here, maybe it isn't. I would just be very patient if that was my approach to the Euro USD. Now, from a macro perspective with the Fibonacci retracements, you can see it from a monthly standpoint. We are just in an incredible rush really since January 1st. Inauguration of Trump, the US dollar has really been hit hard. You see the nice big rally, and now we're just sort of flatlining there, right around 116.50-ish. I would absolutely love a pullback down there to 112.50. I mean, that would definitely be a trade idea for us, but do we get there? Probably not. I mean, honestly, probably not. We may get there towards the end of the year, maybe late November, maybe in December, depending on what the Fed does. But for right this minute, I don't see a big retracement this week down to what I would call a kill zone there. I don't think you're going to get that. Now, what you could do is you could bring your granularity way down to, say, a daily. But the problem with doing that is things get very choppy. They really do. You sort of see this nice wave structure, nice big move back here on the 17th of September, and we've been trending down a little bit, and then we get the compression and then the break. So if you were interested in it, maybe not trading this crossover and wanted to get aggressive to the top side with the Euro USD without waiting for that 9 EMA to cross the 20, then you could do something like this where you step up to the plate and you got a nice spike low there, spike low to a spike high. Potentially, you've got rotational market right around 50%, maybe a pullback right down near 116 even, somewhere right in that zone, back into the Fibonacci golden zone, which is the area between the 50% and the 62%. Maybe, just maybe, that could be an ideal entry to the top side, somewhere right down around 116.13, 116.25. So that's about it for week 43, 2025. We looked at natural gas, U.S. oil, the CAD yen, and the Euro USD. I think there's a lot of real good trades out there for this week's slate of action. We're not going to have a huge market mover, at least from an economic event standpoint until Friday. Friday's CPI, we're going to have that live. Be sure to join us daily this week on your Switch Markets YouTube channel. We're going to have a new live stream each and every day, as we always do. And then Wednesday is going to be our big live webinar series. And this week, we're going to talk about key levels, how to trade key levels. If you have any questions, bring them. I'm more than happy to answer them and help out in any way that I can. Okay, guys, that's a wrap. Keep an eye on the natural gas market. I think that's probably the biggest mover and shaker, but the rest of these markets are ripe with opportunity. So be sure to cash in on yours. And until next time, trade the action well, and we'll talk soon. See ya.